Imagine this hidden economy, running in the shadows, all fueled by crime, but somehow managing to weave itself right into our everyday legitimate world.
Yeah,
That's really what we're diving into today, this huge, often unseen global issue, money laundering.
exactly. It's this pretty sophisticated process criminals use. They take their profits from illegal stuff, could be drugs, fraud, corruption, anything really,
Right.
and they basically wash it.
Make it look legal.
Right.
But
Make it appear like it came from perfectly legitimate sources.
and to really get our heads around this, we're using some key insights today, specifically from FinCrime Intelligence. They give a really sharp look into how this whole hidden world actually works.
Yeah, and our goal for this deep dive really is to unpack that process.
Yeah.
Does it go from, dirty cash to seemingly clean money?
Mhm.
We'll look at the methods, which are always changing,
Always evolving.
understand why it's not just a problem for like banks or the police,
Yeah.
and see how the world is trying to fight back against it.
So the big question is, how do they actually do it? How do you take, say, stacks of cash from some illegal deal and then spend it like it's normal business income?
Hmm.
It's definitely not as simple as just, throwing it in a washing machine. And the analysis we've looked at makes it clear the techniques are constantly getting updated.
Yeah, but what FinCrime Intelligence really points out is that the core goal, that never changes. It's always about creating distance.
Distance between the money and where it really came from.
Exactly. So they can use it without raising suspicion. It's about creating a fake story for the money.
Right. A false history. And the material we reviewed lays out this kind of foundational model, usually with 3 stages, though it's important to say these aren't always strict step-by-step things.
Oh, yeah, absolutely. They can overlap, loop back, criminals adapt. That flexibility is, well, it's part of why it's so tough to stop.
hmm
But generally, the process tends to start with.
Stage 1, placement. This is about getting that initial dirty money, often actual cash, into the legitimate financial system for the very first time.
Right. And you could argue this is where the criminal is most vulnerable.
Yeah,
I mean, carrying around huge amounts of unexplained cash, that's risky.
definitely.
So they need to get it into a bank or maybe turn it into something else fast. Uh, the analysis details tactics like breaking up big sums into smaller deposits, putting them into different accounts.
That's the classic method, isn't it?
It is. Or using the cash to buy things like money orders, maybe prepaid cards. We also see them converting it into assets that are harder to trace back, like gold, or increasingly, digital assets, crypto.
Okay, so let's say they get it in the system, but just having it in a bank account isn't enough, right? The connection is still too obvious.
Exactly. Still too close to the crime. They need to hide the origins. And that brings us neatly to stage 2, layering.
Layering. Sounds complex.
This is where it gets really intricate. Layering is all about obscuring the trail.
Yeah.
It means creating a whole series of complex financial transactions, all designed to separate the money from its source and just muddy the waters for anyone trying to follow it.
So, like, just moving it around a bunch of times.
It's usually way more than that. It's about creating layers,
Mm.
transactions across different accounts, often different banks, and very frequently across international borders using wire transfers.
International makes it harder.
Definitely. And the analysis highlights the heavy use of shell companies. These are basically legal entities, but they don't have any real business operations. They exist just to move money around.
So it looks like real business deals are happening.
Precisely. Trade-based schemes also fit right in here. And they might convert the funds through multiple currencies back and forth, again, just to make tracing more difficult. The sheer volume and complexity, it's designed to just overwhelm investigators.
Wow. Okay, so if they manage placement, getting it in, and then layering, hiding the trail completely, the final step is actually being able to use the money freely. That must be stage 3, integration.
Correct. At this point, the money's been, let's say, laundered.
Mm.
It re-enters the economy, and it looks legitimate. It looks like it came from normal business or personal activities.
And how do they make it look clean in practice?
Well, the document mentions a few common ways.
Mm-hmm.
Investing in real estate is a big one.
Right. Buy a property with dirty money.
Then sell it later.
Mm.
The profit looks like a clean capital gain from an investment. They might also invest in or just buy legitimate businesses.
Mm-hmm.
Those businesses then generate clean revenue going forward.
Okay.
Or simply buying high-value things, luxury cars, art, jewelry, investing in stocks and bonds. Basically, the money is now available for the criminal to spend or even reinvest, looking totally above board.
So those are the 3 basic phases: placement, layering, integration. getting it in, hiding it, getting it back out clean. But how exactly do they do these things? The specific methods seem like a constant battle, especially with technology changing everything.
Oh, absolutely. It's the dynamic nature of this threat. Criminals are incredibly adaptable, very creative. The FinCrime intelligence material outlines several common typologies or specific methods they use across these stages.
We mentioned structuring earlier, that's often called smurfing, right?
Yes, structuring or smurfing. It's a really fundamental technique, mainly for placement. Breaking down those large cash sums into smaller deposits, specifically designed to stay below the amount that banks automatically have to report to regulators.
Ah, staying under the radar.
Exactly. And they often use multiple people or multiple accounts to make these small deposits, hence the name smurfing. It sounds basic, but it's persistent.
And trade-based money laundering, TBML, that one sounds really involved.
QBML is particularly tricky because it hides within legitimate international trade. The analysis explains it involves manipulating the details of import-export transactions.
How so?
Think about things like over-invoicing or under-invoicing goods, saying something is worth much more or much less than it is, creating phantom shipments paperwork for goods that never actually move, or misrepresenting the quality or type of goods.
Okay.
So money is moved internationally, but it's disguised as payment for goods or services. It makes it incredibly hard to spot because it uses the normal documents, invoices, shipping manifests.
Looks real on paper.
Gotcha. And what about shell companies and trusts? You mentioned those for layering.
Absolutely crucial, especially for layering, yeah. The analysis points out that these legal structures, particularly if they're set up in places with high financial secrecy, well, they're powerful tools. They hide who really owns the money, the beneficial owner, and mask what the transactions are really about. Money can just be shuffled between networks of these shell companies all over the world. It creates this almost impenetrable web.
And real estate seems like a pretty straightforward way to integrate the money at the end.
It's very common for integration. Buying property, especially expensive property, lets criminals park huge amounts of illicit cash. Then, when they sell it later, the proceeds look like clean profit from an investment. And it can really mess up property markets in desirable cities.
Drive up prices for everyone else.
Exactly.
What about the classic movie thing, laundering money through casinos? Does that still happen?
It does, according to the analysis. Casino laundering, it involves taking the dirty cash and converting it into casino chips.
The criminal then does some minimal gambling, just enough to look like a genuine player, and then cashes out the chips. The casino gives them a check or a receipt, and suddenly it looks like legitimate gambling winnings.
Which they can then deposit in a bank.
Yep, looks like legitimate income.
And now, the really cutting-edge stuff seems to be digital asset laundering.
Yeah, this is the frontier, and it's evolving incredibly fast. Cryptocurrencies, decentralized finance platforms, DeFi, and these services specifically designed to hide transaction trails, things called mixers or tumblers.
Goosers.
Yeah, they pool transactions together to obscure where individual coins came from. They present huge challenges for investigators. The basic idea hiding the trail is the same as traditional layering, but the pseudo-anonymous nature of crypto, the global reach,
Yeah.
it makes tracing funds extremely difficult.
And I guess what makes it even harder is that criminals rarely just use one trick, right? The analysis mentioned they often combine these methods.
Oh, absolutely. They layer these techniques. They build incredibly complex schemes, often crossing multiple borders using different methods at different stages. That interconnectedness, that adaptability, that's why it's such a persistent global problem.
Which I suppose brings us to the bigger question. Why should you, listening right now, care about this kind of complex financial crime? It can sound pretty distant from most people's everyday lives.
Yeah, but the impact is actually really far-reaching. It affects everyone. The FinCrime intelligence material is very clear. This is absolutely not a victimless crime. First, and maybe most importantly, money laundering is the financial engine for serious organized crime.
You mean it pays for?
It funds terrorism, human trafficking, drug cartels, corruption, illegal arms dealing, awful stuff.
It's literally fueling the worst activities imaginable.
Precisely.
Yeah.
And beyond that, it erodes public trust. Trust in our financial institutions, trust in government. If legitimate businesses and banks can be used to hide criminal fortunes, it undermines faith in the whole system.
And economically.
Economically, it distorts markets. We mentioned real estate, but also investment sectors. It can drive up prices artificially, making it harder for legitimate businesses and individuals. Plus, it reduces government tax revenue. Illicit money bypasses taxation, which contributes to inequality.
Right. And even for legitimate companies, just failing to spot it or prevent it can have huge consequences.
Massive. Businesses that are found to have facilitated money laundering, even if they didn't know it was happening, they can face enormous fines, huge legal bills, and the reputational damage can be devastating, really hard to recover from.
So fighting money laundering isn't just about catching crooks. It's essential for global security, economic stability, and just maintaining basic trust in how things work. Given how big and complicated this is, what are governments and international bodies actually doing about it? What are the rules trying to stop this?
Well, there's a pretty significant global effort, coordinated through various international and national frameworks. A really key player here is the Financial Action Task Force, the FATF.
FATF, what's their role exactly?
So the FATF sets the global standards for anti-money laundering and counter-terrorist financing, AML-CFT they call it. They don't actually enforce laws themselves, but they evaluate countries.
They grade them.
Kind of, yeah. They assess how effectively countries are implementing the FATF standards. This puts pressure on governments to strengthen their own laws and regulations. They're basically the global standard setters.
Okay. And then within regions like the EU.
Yes, the EU has its AML directives. These create a harmonized legal framework across all the member states. They require things like setting up central registers of beneficial ownership.
Making it harder to hide who really owns a company.
Exactly. And they mandate tough customer due diligence CDD standards for banks and other businesses.
And in the US, there's the Bank Secrecy Act, the BSA. That's been around a while.
A cornerstone in the U.S. system, yes. The BSA requires financial institutions to keep detailed records and, crucially, to report suspicious activity to FinCEN, the Financial Crimes Enforcement Network.
Those are the SARs, Suspicious Activity Reports.
That's right. SARs are absolutely vital intelligence for law enforcement investigations.
And the UK. Similar setup.
Pretty similar, yeah. The UK money laundering regulations implement the EU directives, or their post-Brexit equivalents, and put obligations on a wide range of businesses, not just financial firms, but also lawyers, accountants, estate agents, others too. And they also require filing SARs. But in the UK, they go to the National Crime Agency, the NCA.
Okay, so it's clear it's not just banks. A lot of different professionals have a role to play here, and all these rules mean that businesses themselves have to build their own internal defenses. Great.
Precisely. The FinCrime intelligence analysis really stresses how critical these internal AML compliance programs are. Within banks, within other designated businesses, these programs mean setting up policies, having monitoring systems, training staff, and getting independent audits done regularly.
Okay, so let's peel back one more layer then. How do those internal AML programs actually work? Like on the ground, day to day, how do they try and spot and stop this stuff?
Right, this is where the theory meets practice. Effective AML programs have several key components. First up is Customer Due Diligence CDD and Know Your Customer KYC.
So basically figuring out who your customer actually is and what they normally do financially.
Exactly that. You have to verify their identity, obviously, but you also need to understand the nature of their business, where their money comes from, their source of funds, and what their typical transaction patterns look like. You're essentially building a risk profile and a baseline of what's normal for that specific customer.
And having that baseline helps you spot things that aren't normal later on.
Directly. That leads right into transaction monitoring. Banks and other firms use automated systems, sophisticated software, to analyze millions of transactions every single day.
Wow.
They're looking for patterns that deviate from that customer's established normal behavior, or transactions involving high-risk countries or individuals, or patterns that just fit known money laundering methods, those typologies we talked about. Technology is absolutely crucial here.
And if the system flags something, or maybe an employee notices something weird.
That's when the need to consider filing a suspicious activity report, a SAR, comes in. These reports go to the National Financial Intelligence Unit, like FinCEN or the NCA. They detail the transaction or the activity that just doesn't seem to have a clear, legitimate business reason or lawful purpose. SARs are the intelligence that fuels investigations.
They also have to check names against official lists, don't they?
Yes, sanction screening, that's essential. Businesses have to check their customers, and sometimes the counterparties in transactions, against lists of sanctioned individuals, companies, or even entire countries. These sanctions are imposed by bodies like the UN or by national governments. Doing business with sanctioned parties is generally prohibited.
Okay, and none of this technology or these processes work if the actual people involved, the employees, don't know what they're looking for or why it matters.
Absolutely critical. You can't automate everything. Good AML programs require regular, effective employee training, Staff need to understand the risks, the regulations, how to spot potential red flags in customer behavior or transactions, and critically, know the correct procedure for escalating concerns internally. They're like the human firewall.
It sounds like a huge undertaking, all that data, all those checks. Is technology making a real difference?
Oh, hugely, and increasingly so. The analysis definitely points to the growing reliance on things like artificial intelligence, AI, and machine learning.
How do they help?
These tools can analyze massive data sets much faster than humans. They can identify really complex, subtle patterns that a human analyst might miss, and they can help manage the sheer volume of alerts that transaction monitoring systems generate, helping teams focus on the highest risks. It makes the whole process more efficient and hopefully more effective at catching sophisticated schemes.
So, if we try and bring this all together, thinking about everything we've discussed from the FinCrime intelligence material, what's the main takeaway from this deep dive?
I think it really reinforces that money laundering isn't just some technical financial crime. It's a complex, constantly shifting threat that's deeply connected to serious underlying criminal activity. And it genuinely corrodes our legitimate systems, our economies, our societies. It has real-world impacts.
And the financial industry, plus a whole range of other businesses, they're essentially on the front lines here. They're tasked with putting these robust compliance programs in place, using vigilance, technology, and what they call a risk-based approach to try and disrupt these flows of dirty money.
It really is a constant battle. Criminal ingenuity versus regulatory defense and technological evolution.
Yeah. So we've walked through what money laundering actually is, those typical stages: placement, layering, integration, the varied and always adapting methods criminals are using, from smurfing to crypto,
The huge global impact it has.
and the regulatory frameworks and detection methods being used to try and fight back.
And the key thing, as we've seen, is that the methods just keep changing, which means the defense has to keep adapting too. Constant vigilance.
So here's a final thought for you to consider. Thinking about how fast financial technology is moving, crypto, instant payments, AI itself, and remembering how creative criminals always seem to be. What do you think is maybe the single biggest challenge that regulators and banks and everyone involved face in trying to stay one step ahead of the money launderers in the next few years?
It's a really critical question for the future, isn't it? We've laid out the landscape based on the source material, and hopefully this deep dive helps you think about this vital topic with a bit more insight.